The World Bank and ratings agency S&P in the latest report has revealed that some of South Africa's worst performing ports, some of these ports include Nqura as well as Gqeberha, Durban and Cape Town. The South African Association of Freight Forwarders says the country's ports have not been performing optimally and are still performing 25% below the global standards for container movement and vessel turnaround times. For more on this, let's now bring in the chair of the Cape Town Port Liaison Forum, that is Mike Walwyn. Mike, a very good morning to you. Thank you so much for making time for us. So as a country, how should we understand this particular ratings from the World Bank as well as S&P?
Thanks very much, Alden. It has a huge impact on our economy. Now, this World Bank rating follows last year's version, in which we fared almost as badly, not quite. This year includes more ports. There are 400 ports now included in this thing. Last year there were about 360. And yet we are now the bottom 4 positions in the ranking. Now that, you can argue, and we do argue times, with the methodology they use and some of the ways they go about producing these reports. But the message is quite clear. We are nowhere near where we want to be. So what is the reason for this? It's about a lot of things. It's about maintenance of existing equipment, which has not been done. And so the breakdown ratio is much higher than it should be. It's about non-replacement of goods that were due for replacement that should have been replaced. And these are big capital items. And it's about the lack of funding to do that, because I think you've heard Treasury saying no more handouts for the SOEs. And it's about also the people that run these operations. And you put all that together, and without being over-dramatic, I think you have a bit of a perfect storm. So that's where we stand at the moment. Now, what's going to be done about it, we can talk about it, and there are things. Yeah. I will give some credit to Transnet. Over the last 3-4 months particularly, we've seen signs of improvement in the ports in certain areas anywhere. And that really is a pleasure. We have seen, as you probably know, a change in management of Transnet. And I think that was a good move. We have a lady there who knows what she's doing. But I have to stress that she doesn't really have a chance on her own. You know, it's a big, big job, and it needs a lot of input. Yep. And we have some doubts as to whether all that input will be available. So that is another issue. And then on a people level, we shouldn't forget that her predecessor sought the voluntary retrenchment of around 750 skilled and experienced people from Transnet. And you don't replace those overnight either. So put it all together, and that brings us to where we are in these ratings. And I think it's a good, I'd say, wake-up call. In fact, we had that last year already, but it's a good wake-up call. And we need to take urgent action to resolve the problems that we're seeing.
Yeah. So what's the matrix then that is used by S&P as well as the World Bank that would bring the industry in South Africa to the conclusion that their finding is actually flawed?
Well, they say we're focusing, or that the World Bank, if you like, is focusing on the wrong measurements, if you will. One of the things, for example, that the World Bank focuses on is productivity, which is we define in terms of moves of containers per hour. How many containers per hour do you move on and off ships? Now, in an international context, we would expect to see figures like 25, and in some cases going up to 30 containers per hour. Here, we have been struggling in the mid to low teens. And that is a very clear indication that there's something wrong with our productivity. The same applies to the numbers of containers you move on and off a ship, which when you're using 3 cranes, obviously it's going to be a lot more. But the principle is the same. You're not moving nearly enough in short enough a time. So you could say that there are other things which come into play, and you can, and Transnet has some success. But our point is really that that's not the issue. The issue is that we have a problem. Yeah. And you can argue about the way you measure it, and you can maybe move it up a position or two, but that's not the issue.
Yeah. I want to take you back to it was a stakeholder workshop that was held in Cape Town back in December 2020 with the MEC for Finance and Economic Opportunities being part of that stakeholder engagement. This is what was issued in that statement. Concluding the workshops, we identified a number of key issues that will be the focus of the Port of Cape Town's task team. And I'm raising this on the basis that the report finds that the Cape Town port is the worst of the 405. So some of the issues that are raised here is unlocking economic growth potential of ship repair and yacht building, optimizing economic utilization of property and commercial potential in the port, advancing skills development across the entire logistics chain, strategy of convergence amongst major agencies in the port logistics chain, and also the issues around repair and of malfunctioning refrigerator container plug points and the development of an ongoing maintenance plan, which means that there have been problems as far back as 2020 that have been highlighted. How many of those have been sorted out to date?
Yeah, it's a good question. You will see that a few of them are not related to what I've been talking about, to more peripheral areas of the port. And by and large, those have been sorted out. They talk there about the skills deficit, and I would say that certainly hasn't been, especially since those retrenchments. They are talking about the refrigerated container plug points. Yes, that's been fixed up. So anything that was less intrinsic to port operations in terms of productivity has to a large extent been dealt with, but the main issues remain.
The main issues remain. What about the open access and also the calls for more private investment in the rail sector? The government has announced the policy shift as well to allow more private players into the space. How far are we with regards to that implementation of the policy?
Yes, it's been good to see some movement in that direction. We, as an association of freight forwarders, have for some time been advocating for more public-private partnership, more private sector involvement, if you will. And we are not talking about privatization, but about partnerships. Now, in the rail area, you just mentioned it, there's some action there. There is also in the port area, there is an agreement with the major Filipino terminal operator to get involved in Durban's Pier 2 operation, which is our biggest one. And that is supposed to be happening around about now. There seem to be some delays, and I'm not sure what those are, but that is an agreement and has certainly been signed in principle. And then there is proposal for another smaller terminal operation in Cape Town. So there is a little bit of movement in that direction, but the real key is to get our big container terminals up and running properly and quickly. And Durban, as I said, Durban Pier 2 is the biggest one of those. But there's also, of course, Durban Pier 1, and there is Cape Town, and there is Nqura, and all of those need to get going.
Yep. Going forward, what should happen? And I'm asking this question also on the basis of what the CEO of the South African Association of Freight Forwarders is saying, Juanita Marie, saying that over the past 30 years, there haven't been investment in the port infrastructure. But when we analyze the data, of course, we see that we are in the region of around 250 and 280 in terms of the rankings. But the point that she makes here is around the lack of investment over the past 30 years. So what should happen going forward to not find the country in this position again, and also to ensure that the country remains a key player when it comes to logistics on the continent and being the access point for the rest of the continent?
Yeah, very good one. I think you'll find that the investment side is problematic. I've already mentioned, and you know it, that the Treasury is not willing to fund SOEs any further. We know that in terms of loan finance, Transnet needs around about 120 billion rand, somewhere there. They were given a 47 billion rand guarantee by government not so long ago, and it was fairly clear that that was the end of the line. So that's not nearly enough to buy what is needed and to upgrade the equipment that Transnet has. They need more. How are they going to get that? In these partnerships. If you have a partnership with a really respectable, good, big terminal operator, that operator is going to provide the funding for the equipment you need to run the terminal, in exchange for which he will earn what he does over a longish period of operation of that terminal, say 20 years. That's a normal way of doing things. So the private participation, apart from being good from an operational perspective, is, I think, actually essential from a financial perspective as well.
Yeah. Finally, the Government of National Unity talks are underway, and when it comes to the competency around the operations of the various ports, which also exist in a local municipality, exist in a province, do you think that a case has been made out for a devolution of powers when it comes to the operations of the ports?
Well, I'd like to think so. I think the case has been made all right. It's the political will to do it. We know that government up till now, with good reason, I suppose, has been nervous of the union reaction to this, and that is a potential problem. So it's more a political issue than a financial or operational one. There are other considerations just for your interest. I mean, at the moment, this is not restricted to South Africa. The most constricted port in the world at the moment, because of volume, is Singapore, and that was the star in the world's port crown. That will last only for a little while and it will go away again. I can't say the same about ours. And, you know, we see little indicators like this all over the world. We have declining volumes in South Africa. Our volume of cargo is less than it was 5 and 10 years ago. And you would think that means we should be able to handle it well. So there are a lot of indicators that tell us that we really have to get some action there.
Yeah, and I think also the mechanism that is needed to, so when industry sounds the alarm, the agility of the state to actually respond to this. Because in the issue, for instance, in terms of the load that has been exported, when we think about, for instance, the Mining Council, they have been sounding the alarm continuously. And it took, I don't know how many acting CEOs of Transnet to finally get to a position where you can say that now you have a recovery plan that has been endorsed by the president.
I think that's right. There was no movement, no real action in any direction until that happened. Now the jury's out, I suppose. And to illustrate your point, I haven't even touched on mining in Richards Bay, but the country exported about 20 million tons less coal than it could have last year. And that's thanks to maybe a very parlous railway system. Now, that 20 million in terms of South Africa's economy is a very, very big number. So that also, as well as the container business, has to be sorted out. Yeah,
certainly. And this is something that has been raised as well by the Monetary Policy Committee as well when it comes to our logistics and the impact that has had on the growth of our GDP. Mike, thank you so much for your time. Mike Walwyn there is the chairperson of the Cape Town Port Liaison Forum.